There's the bell. I had to. What do you mean you had to? Well, we're trying to help the market get a bottom here. So we're trying to use that lucky green shirt, okay, to help the market. As I said in chat, the Fonz wore the white shirt, okay? I'm dating myself a little bit. Hopefully you know what I'm talking about. JB wears the green shirt. So anyway, we'll talk about that and how that relates to hopefully the color of the candles that we're seeing that are above the shorter term moving average. Welcome all to this Fed Day of Jerome Powell. And we'll talk about that and how it's affecting some of the trading growth and value setups here today. Now, I would like to welcome Sandy, BJ, Double B, or Bill Barnhof, AP 514, BJ, Mitch, Christ, and others. Welcome to all. Now, just real quick as we get started, the information here is provided for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. We're just showing examples, okay? Also, Schwab does not recommend the use of technical analysis as a sole means of research. And we're going to be looking at some of the fundamental information. Just because the investor can read, that does not mean they're an analyst. They're just reading some of the ratios that they can actually also learn about in the online course right on the schwab.com. So do not mistake, if you have not gone through the course on the schwab.com website, do so. That way you can get acclimated to some of the terminology that you also see on the Thinkorswim platform. We will use the Paper Money software application for educational purposes for our examples. And also remember that investing in stocks involves risk, including loss of principal. Now, quick heads up. If you bookmark this, or just write it down if you like, schwab.com, okay, /events. Now, if you do that, you guys know that we're going to be in Chicago. Barb and Ben are going to be in Chicago this weekend. Coming up in Detroit, the 11th and 12th, the first day being technical analysis, the second day being option strategies. These are free events. So if you went to, for example, that schwab.com /events, you're going to see the calendar for the entire year. So if you said, well, what about Dallas? What about Washington, D.C.? What about whatever? Go to schwab.com /events and you'll see the whole list of all of those, okay? And we could see where they were, and we'll just do this, okay? So if we go to schwab.com /coaching or events, you're going to see live webcasts and virtual workshops there, or in-person events right there. And if I click on the in-person events and I scroll down, there we are in Chicago. There's what I just mentioned in Detroit. You're also going to see that someone was asking today, well, are you guys coming to Dallas? Yeah, we are. It's in April. Bookmark this, right? That little star up there, bookmark it. And you're going to see that also we're coming to Denver, okay? Just on the other side of the mountain range from where I am. And also, last but not least, coming to, if you live in the great state of California, you're going to see that we're going to be in Anaheim as well, May 30th and 31st. So feel free to join us. How much is it? Well, you don't pay anything. You're really investing your time, okay? And you could be with a couple other 100 or so plus fellow attendees that are actually learning live, okay? Join us. Now, also quick reminder, those events, the room's only so big. So there is a certain point where they do close those. That's not a sales pitch, okay? It is true. Some of those events have been 500, 600, 700, 800 people, right? And some events, they do at some point do close down the registration. So be aware of that. Now, today, what I want to really talk about is really kind of where the market is post the Fed. And I want to kind of go back to the theme that I said on Monday. Does anybody remember what we talked about on Monday? We talked about two words, diagonal resistance, okay? And that's going to be something, we try to always talk about things that are timely, and then we want to make sure that we can kind of get practice on that, okay? So when I teach something, I don't like to just teach something once and then just leave it, because I'm like, well, how good is it, okay? I like to teach something like how to use a screwdriver, how to use a hammer. I want tools that I could use frequently, okay? And we're going to go back to the tool of that diagonal resistance and talk about it in terms of the technicals, but also the fundamentals. And also kind of begs the question, why do people change the tools all the time? I mean, if they're such good tools, why? Maybe you should ask. Now, let's go ahead and take a look at this. I want to pull up first off, okay? Let's just kind of get a quick sense of where we kind of closed. We saw Dow holding up 384, about 0.9%, okay? As a bull, you always want more, okay? It doesn't matter if it was up about 0.9. You always like to be triple that and up that tomorrow morning before the market opens. Now, if you look at the Russell, which I want to kind of get a quick visual of for a sentiment gauge, we see about 1.5% there. Again, always want more. And if we look at the NASDAQ 253, about 1.3%, the S&P about 60 points, and we see we're about 1.08. Now, probably the main takeaway from this is really the trend column. And that trend column, if we take a look at this, and let me try to make this a little bit bigger on your side, and I'm going to go look and feel. Let's go larger, okay? Now, if we take a look at this, I want to go to that trend column right there. And we talked about this. If we were starting to see diagonal resistance breakouts, which just means price getting back up above the 10-period moving average, we'd be seeing trend 2. Now, this is my disclaimer. Get ready, okay? When we talk about these scripts, they're not guaranteed for accuracy or timing, okay? You want to have an understanding of what that trend is trying to identify, and then you manually can confirm that, okay? So if I go to that trend right there, right-click on it and go edit formula, you're now going to see it's going to give us really some definitions of really what it's trying to find, okay? Now, Wiley is a Makita person. Oh, I'm so sad for Wiley. Go red. Okay, I'm just joking with you, having a little fun there. Now, if we take a look at this, so we see the SPX, we see the Russell, Dow, and the SOX all going trend 2 here today. What do they look like on the chart? Okay, Wiley, it's never too late for you. All right, here we go. Now, if we take a look at this, what we talked about 2 weeks ago is getting the market to come out of that oversold territory. Finally, the first time in a while, we've actually been seeing the NASDAQ on the north side of the oversold territory. So better. It's a start, okay? Now, when you also look at the crossover, we hadn't had a crossover bullish. Last time we got a crossover was on 221. Fast forward a month. Felt like a year. And if you take a look at this, the indicators told us sellers were in control. And they controlled it for about a month, okay? And all of a sudden, we started seeing a crossover on, Thursday? There's Friday. Well, actually, no, that's Friday. This is Monday. Tuesday, what we said yesterday is I said on the breakout day, when you get a breakout, the second day tends to be the highest. When you get a pullback, the red color candle, that's normal. We said that yesterday. And then you want to kind of see can we start to make a higher low. That's what we're working on now. Now, the $1 million question, okay? The $1 million question is always, how do you know it's going to bounce? We could say that at any time. On any entry, you never know what it could do. That's why you're setting a stop and position sizing. Now, so better so far on the NASDAQ. Now, do all stocks look like the NASDAQ? No, some look way better than the NASDAQ. No one said you had to do the NASDAQ. We're just kind of taking a look at the index in general. Quickly, if you look at the Russell. Now, if we said, well, why are we looking at the Russell? The only reason why we're looking at the Russell is because it is like a sentiment gauge, okay? And what I mean by that is if people are buying small caps, now remember, this could be two things here. This could be buyers buying the index itself or product that tracks the index, but what else could it be? What else could it be? We went over that last week. When you get a diagonal resistance breakout, okay, when you get a diagonal resistance breakout, who might be exiting? If someone was trading that move to the downside, they might be long? No. Short? And if they're short, let's say they were short 100 shares hypothetically of the Russell, well, how do they get out and profit take? If you're short 100 shares, how do you get out? And people don't understand this. The way you get out is you try to buy or you buy 100 shares hypothetically of the Russell. So if you buy 100 shares, what could it do to the price graph? Oh, it could push it up. And people buying shares, hypothetically of the Russell, to get out, it could knock the price through resistance. Now, Second part of that is, could you get actual real buyers who were not short just to get back in? Yes. Okay. And so that's why we kind of see that double whammy effect of shorts covering, short meaning bearish investors, and long investors who are just going bullish in general. Okay. Now, when we pull up, let's say the SPX and not looking a whole lot different there, but what you're going to see is nice little bounce on the 10-period moving average. Don't forget that. And the Dow Jones, what does it look like? Now, when we look at the Dow Jones, did not have to come down as far to the 10-period moving average, held up a little bit better. And what you're now going to notice is another whole dot on the Dow Jones. Okay, so this is probably telling us there's some better options now, at least to consider in terms of trend or setups. If the investor says, James, I want to be bullish. Probably the chart of the day, which I can't pull up, at least here, is going to be gold touch 3,058. I mean, who's tracking? David, stop paying attention. We also saw copper touch 511. We talked about how that's probably a canary in the coal mine. Why would copper be hitting not all-time highs, but why would copper be hitting brand new highs if things were so bad? I'm just saying, okay? And copper hit 511. Silver did not break out, but probably the chart of the day that we will talk about before we look at some examples. We kept talking about if the VIX gets below 25. Now remember, if VIX gets down below 25, it's breaking the diagonal support. If the VIX breaks diagonal support, that means that many stocks probably break their diagonal resistance. And that's why we talked about that on Monday. Okay, so when you break diagonal support on the VIX, that means if we pull up XYZ stock, they're probably making lower lows and lower highs, as this chart was making higher highs and higher lows, just the opposite. And all of a sudden, if this breaks down, many charts break to the upside. So the homework assignment that we really gave you on Monday was really kind of practice setting up dollar cost averaging, setting up buy stop limits, and that was a good homework assignment to practice, and I'm sure you've learned a lot from that if you did the homework and Jax did not eat your homework. Okay, Jax is my dog. Now, today, kind of more favorable here, getting a little bearish engulfing to the downside. Never, bullish investors like to see that. Now, I want to kind of bring up a couple stocks, okay? Now, just real quick, can you tell me what are some of the stocks that you're watching? And if I could, I'd go back and I'd close my blinds so no one could see what was on my screen. Whatever stocks you tell me, I promise I won't tell anyone except for Jax, okay? Now, as I'm getting those stocks that maybe some stocks that you're looking at, let me know. I just want to take a quick peeky at some of the things we're seeing on the sectors. We saw some things I want to kind of keep an eye on is when you look at discretionaries, some of the stocks like cruise ships, airlines, okay, and also maybe a travel website I want to kind of keep an eye on. One of the stocks I want to look at in the discretionary space / transports is Love Southwest Airlines. Okay, we're going to talk about that. When you also take a look at energy stocks, we did see Chevron actually hit a brand new high here as well in the shorter term. Technology moving back up a little bit. When we talk about industrials, we talked about Triple M yesterday and RTX. That's in the industrial space, getting a little bit better of a push here. Now, the other name that I want to kind of bring up is the communication sector. And when we talk about communication sector, we're going to bring up a stock like Netflix, okay? Now, when we talk about trend reversals so far, well, it'd be industrials. It would be the S&P 500 as a benchmark, if you use a benchmark. You're also going to see that when you look at utilities, okay, it's also up in there as well. Let me take this one off, okay? Don't know how it got there. And now, let's couple stocks. Okay, so Grace, I see what you wrote. Let's go talk just real quick about one of the communication stocks. Okay, now, if you were to ask me about what I know about Netflix, I'd say not a whole lot, okay? I don't watch a ton of TV. I really don't. I do know this, that I do live a regular life, and historically, I remember getting Netflix for like $7, $6.95. Well, about 2 months ago, we as a family kind of watched a Netflix show. And if you wanted to watch it, you had to get on Netflix, or at least that's what they wanted you to do. And you looked to sign up, and it was like $22, $24. Now, you do not have to be an analyst. You don't have to have a PhD in finance or economics to know that if a company is charging that and they feel like they can get it, the demand might be fairly decent. Now, if they bring in that amount of money, you know that the revenue might be kind of maybe a little higher perhaps. If they're actually, for example, getting a higher amount for subscriptions, you're thinking, might they have potential higher profitability? Okay, at least that's the idea. Now, when we take a look at this just real quick, I want us to kind of look at kind of this line right here, okay? This yellow line really represents the diagonal resistance, okay? And if you go back and look at this, when we get the diagonal break, a lot of times that could also be where the moving average crosses. When you start to, for example, get some separation on the moving averages, you get that wider shading there, representing there's some width between that 20-period moving average, the bottom moving average, and the 10-period moving average, which is closer to the price. Now, here we are in communications, okay? And what you're now going to notice is there's the breakout day itself. So we define the breakout, our definition, you might have a different definition, we want to see the whole body above the diagonal line, the whole body. That's requirement number one. Requirement number two, we want the closing price above the open. So that would meet the requirement. Now, does that guarantee the stock's going to go up? No. Why do you have those two requirements? Well, when you go back and look at many breakouts over time, your definition of what do you mean by a bounce or what do you mean by a breakout might come from a history of kind of back testing those and trying to like thin out some of the ones that might be false breakouts and or bounces. Hence the definition. But it doesn't mean it always works. Now, if we come back to this, what you're now going to see is it fell down to the upward trending 10-period moving average. And then here we are right there. Now, if I zoom in a little bit, you're going to see the whole dot right there. Now, I'm going to go back to analyze. Now, here's the fun part. We probably went to high school, we went to college, and we can read. And just because we can read, that doesn't mean we're an analyst, okay? It ain't that easy, okay? Now, if I look at this and I scroll down a little bit, I'm kind of expecting, based on my initial comments, I don't know for sure, and I have nothing prepared. I don't have anything about, hey, I looked into the 10Q, the 10K, the whole 9 years. I didn't look at all. I want to just start with doing it together right here and now. Now, if you look at, let's say, the revenue, let's scroll down a little bit and look at the bottom. Up top is going to give the share values, okay? And when we look at the share values, if we were looking for revenue, another word for revenue would be sales. They're quoting sales per share. And if you look at sales per share, and we're kind of assuming that the share count stays the same, what you're now going to see is in 2020, 21, 22, 23, 24, the sales have gone up. Now, this is a major point, okay? When we talk about these sales or earnings per share, etc., these are historical numbers for a fundamentalist. That doesn't mean today. That doesn't mean next quarter. But if you're a technician, you're looking at the price. It could have been a month ago, 2 months ago, 3 months ago, etc. The technician is using lagging data or price and or volume, etc. And a fundamentalist is actually using lagging statistics, okay, as well, wondering if that trend could continue. So more of the story is pretty strong trend, wondering if it can continue. Second, when you look at the earnings per share, you're seeing that in this number in 2020, they're at 608, 11, 995 took a step down, 12, and then 1983. Now, the one thing to kind of bring out is, we're just kind of wondering, could those trends continue? Now, if they're going up like that, you would like to kind of maybe compare that to peers and saying, is this kind of an outlier? Or is there other stocks in the space that are kind of doing something similar? Okay. Now, what I'm going to do is I'm going to go back to the chart just real quick. And what we're going to do on this is we're going to buy those shares of stock. And what we're going to do on this chart is I'm going to see if I have any money left. Okay. It's thin. I don't have a ton of money. Okay. Some of this money might be tied up in this paper money account. what I'm going to do, and I want us to kind of look at this for just a moment. Do you notice anything down below on volume? Now, I know some of you like to see volume. Notice anything? Where was the capitulation of volume? As people were like, okay, running. Oh my gosh, it's horrible. Okay, you get a little capitulation, that above average volume. Now, here's the deal. You got to remember something is sometimes when you kind of get price to collapse, you get volume to spike. Sometimes when people are at a peak emotional state of despair. And I said to you before 2 weeks ago, when the markets go down, it's almost like the market just want to get people to mentally quit and throw in that towel. And that way they just give up those shares at the maybe an opportune time for those people who are kind of more at a normal state of mind. Right? That's what happens. Okay? Now, if we take a look at this, kind of a little increased volume on the bullish side, increased volume, little increased volume. So the move has actually kind of been supported a little bit by some of the fundamentals and the technicals. And if we say the technicals, we're not just saying price, we're also saying volume. Now, what I'm going to do on this chart is I'm going to right click and I'm going to actually come back and say buy custom with OCO bracket. Now, I am fully expecting someone to say, but wait, James, you're at a major area of resistance. Was anyone thinking that? Anyone? Okay. Now, we might kind of say, look, there's a massive red candle here to the downside. And then we went up and then we actually made a higher low into that area of resistance. So the fact that we actually dropped so hard and then V'd back to the upside, if you want to say that like that, you know, it's almost symmetrical in terms of duration of time, but not quite. It's kind of surprising. Now, sometimes when you see this, that we smash below support, sometimes it can completely reverse like the whole entire drop never happened. And we've talked about that. Now, we're speculating. We don't know if it's really going to go the upside. And what I want to kind of do is go buy custom with OCO bracket. And then what I'm going to do is I'm going to say limit day. Now, if we did limit, we're just saying, now, what's the after hour price? After hour price is about 961, 960 and a half. I'm going to put this about 960 and a half. Now, I taught Barbara's class one day that's called the after hours kind of session. We talked about kind of seeing the extended hours, the different order types, etc. Feel free to look at that on the after hours trading. Now, you're also going to notice when we look at the high, we're going to set that target right at the prior high. If you're talking about a trader and you like to do swing trading, you know, many technicians will use that prior high to try to get in. Now, the other thing to kind of take into consideration is when we talked about dollar cost averaging, we never talked about dollar cost averaging if the stock went down, add more. We talked about if the stock went up higher than the first entry to practice entering more. So I just want to kind of answer that. If we had a little bit more time, that would be kind of, at least maybe on another example, we could look at it, but I'm going to move here. I'm going to set the stop in this example underneath today's low being 922.27. And if we set that stop maybe less, and I'm going to do this kind of a little variation here. If we did less 1%, it's going to give us 913. Now, we might say, oh, that's a better stop because I'm risking less, but just a tighter stop means that you have a greater chance to get stopped out. Let's be honest here. I'm going to show that because some of you said, hey, can we show an example of a tighter stop? I read your question. I'm answering that. Let's kind of show that. Pros and cons, data GTC. Now, if we kind of said in this case, capital-wise, how much could we do? If we chose, let's say, example given, 6,500, okay, it's going to give us about 6 or 7 shares. Now, again, when we talk about these 6 or 7 shares, this is not the first time we've done this, okay? And we've shown examples where we made a couple $100 or over 1,000, and we've been down a couple $100 or 1,000. Do not think $6 is like non-material gains or losses, because these bigger dollar stocks, they could go up 50, $100. They're bigger dollar stocks, okay? So it sounds like a bigger dollar amount, but the percentages, okay, is what's important here. Now, what I want to kind of do is, so here's what's kind of interesting. This is a $960 stock. We're buying 6 shares, but it's the same capital size that we always do. Okay. I'm going to go to confirm and send. And if it rejects it, I'll have to kind of put it back in there. Remember how the stop works. Okay. No guarantee what it actually fills at will be the same as the activation price. Activation price is just the stop price. That's the stop price we put in. The execution price, what it fills at, we don't know. That's undefined yet. The stop is a market order. What does that even mean? We don't know where it's going to fill at. Okay. Send. Now, if I click send, it's going to be sitting right here. Now, if you're a bearish investor and you said, hey, I think we're still in a bearish downtrend, this could be the bear flag. Well, what happens if tomorrow, hypothetically, or the next day after that, the candle looks like this? Now, what are you going to say? Okay. Well, if all of a sudden the candle looks like this and the bearish investor is saying, well, I think it's still bearish, I'm still thinking it's a bear flag, and all of a sudden just a candle slices, chops its way through that 963 level, now what? Well, those bearish investors who might still be bearish might say, you know what, it's reversing now, and now it could be potentially trying to swing back up to the prior high. What we have seen in examples, if we actually drop down below support, the faster it can get back above old support, new potential resistance, statistically, probability-wise, might have a higher chance to try to go back up to the prior high. Why do we say that? Well, because somebody was buying it below support, which completely goes against kind of what we normally think, because we're not buying millions of shares of stock, okay? But if some institution, or institutions plural, are buying below support, they could have the ammunition of capital that they might think that they could turn this around and smash it through some levels and cause the trend to change, okay? Any questions there? Any questions? Now, the comment was from Carlos. What about like a derivative type of position? In this class, it's labeled as a stock class. So if we were in the class, let's say tomorrow, and trading the trend at 1 p.m. Eastern, could we actually talk about that type of strat? Yes. It doesn't matter if we did this as a stock trade. The thing is, we want to kind of make sure, does that stock have liquidity? And if the stock had liquidity, could it be something maybe that the investor might consider for a derivative type strategy? The whole thing comes back to liquidity. And what does the investor want to do in terms of sensitivity to direction and max gain, max loss? So that's how you have to answer that question. Now, want to go back to just real quick. One of the other stocks that we talked about yesterday, said we're going to keep an eye on it. It was Raytheon. Not Raytheon. Let me double check. RTX Corp. Okay. RTX Corp. And we actually did see on RTX Corp, which, by the way, you might wonder, what do they do? Okay. Well, they're an aerospace and defense company. Okay. Commercial, military, government customers, etc. They're also tied into, they got 3 segments. Collins Aerospace. I think many of you might know more about Pratt and Whitney. And where I got messed up is Raytheon. Okay, so now what you're going to see in this case, you're going to see that I want just kind of looking to see threat detection, which has kind of been a big one lately, okay? Tracking, so on. But I think the biggest thing is offensive threat detection. Boy, that's kind of been big lately. And you're going to see that actually did hit a brand new high here. Now, this also brand new high was accompanied by volume going above the average line as well. Now, I want to also go back to the other one in which I said Triple M. Now, I want to show just quickly. We talked about this, but how can we do this and do this fast and just do application of what we taught? Okay. So remember, let's say the investor says, you know, James, I'm kind of wondering if Triple M might try to get above this area of resistance. Okay. And we're going to kind of imagine, you know what? I don't want to take a full position here, but I want to get in some, okay? Now, you guys and gals remember us talking about ATR, average true range. You remember us talking about that? Well, let's do this, okay? So remember the rule of thumb we talked about is if let's kind of take our position size, $6,500. Let's say we're going to get in half position. Half position will be $3,250. So what I'm going to do is I'm going to right click on the chart. I'm going to go to buy custom. For the moment, I'm just going to do with stop. All I'm going to do in this case is I'm going to go down to the dollar amount right there, type in $3,250. I'm going to chop the position in half. 6,500, cut it in half, $3,250. You're going to see that how many shares is it? 21 shares. Once we know that, I can just type in 21 shares. Now, what I'm going to do is, well, what about the stop? Okay. Well, what we're going to do is, in this case, is we're going to kind of look and see where do we see support over about the last maybe 2 to 3 weeks or so. It could be a horizontal line. It could be a diagonal line. If it's more horizontal, it's been more sideways. If it's a diagonal line, it's really been more probably an upward trend. Okay. Now, if we take a look at that, where's that support? We really got the support right at 146. Okay. 54 less 2%, which we typically do. 143.61. Okay. So 143.61. Now, what I want to do in this case is I also want to kind of use this with kind of the order that we talked about yesterday. Let's imagine the investor says, no, I don't want to get in until I get above 154. So how do you do that? You should know how to do this now. Okay. Limit, stop limit. I'm going to type in 154. Okay. And I'm going to say, look, do not get in until that stock gets above 154, but the most you can get in, which we talked about yesterday, just doing another example of it, 155. Okay. Now, when we look at the stop, let's just verify 143.60. Okay. 143.60. Now, how many of you practice that? Okay. Now, if you didn't, just say, look, James, I didn't do it yet. I'm glad you're doing it again so I can see it. So I'm saying in this case, buy the stock if it goes to 154 or higher, and you can buy it up to 155, but not a penny higher. Okay. Now, the stop underneath there. Now, what I'm going to do is I'm going to come back to this. We already talked about the stop, how that works. Send the order. Now, what I'm going to do now is I'm going to take a look at our first order. I'm going to write this down so we can practice. The first order was 154. What are we going to do with the ATR? Well, we're going to take that one ATR, which is 391, and this is our first entry price. We're taking the 391, which is one ATR higher than the first entry. And if we add those two together, what do we get? Survey says 157.91. Well, what is this order? What is this going to be? This is going to be the second entry price. This is going to be the buy stop price. And guess what the limit's going to be? The limit is going to be 158.91. Okay? Now here's the thing. We're going to do over and over. So one of the things I found out when I first got started with investing is I wasn't doing things over and over again. I was actually just kind of trading based on feeling. And my feelings changed in the morning. They changed in the afternoon. Then tomorrow was different than yesterday. There was never any routine or like trade rule set at all. It was just how I felt. Man, that's tough. Okay, that is tough. So we're going to kind of say, look, maybe let's park that idea on feelings. I don't know where to go with that. Okay. But what I'm going to do in this case is I'm going to kind of set up that second order. Where's the second order? Well, we said 157.91, 157.91. Now, this is what blows people's minds. They're like, wait, you're saying you're going to buy this at a higher price? When I go to the grocery store, I like to buy cheaper. Now, remember, we're not buying apples and peaches and eggs and trying to get a little deal. Okay, as a consumer, we're trying to be an investor. We're trying to buy something that has momentum. We're not trying to buy something cheap, okay? We're trying to buy something that might have momentum and value and trend, okay? Now, the problem with buying cheap is how much can you sell it for? A lot of times you buy something cheap and you're like, man, when I tried to sell it, nobody wanted to give me anything for it. Exactly. Okay. So it doesn't always work out. Be careful of that. Now, 143.61. Now, notice that the stop is the exact same. Okay. And if we went back and said, hey, if I was going to take that capital again, let's say 32.50, what should we notice a little bit? Well, if the stock price is higher, we're probably not going to be able to buy as many shares. Why? Stock's price higher. So in the second order, we're going to actually have 20 shares. Okay. Now, are there people that maybe have like a little worksheet and they just type this in and it tells them the numbers? Oh, you better believe it. Okay. And you don't have to be a spreadsheet nerd to do that. Now, or a sheet of paper. So the second entry, if that stock actually goes higher, we're going to try to catch it. Now, we're thinking that if it can go up to that price, there might be a trend. Might. Okay. And we're wondering if that trend could continue. That's the idea. Okay. Got the stop underneath, confirm send the order, fire in the hole. Now, if we actually come back and take a look at this, why have we talked about this? Okay. Well, when you go back to this chart, whenever you get pullbacks in markets, you're always trying to identify stocks that are showing recent relative strength. Now, you wouldn't need any statistical numbers to kind of gauge. You could say, what has the S&P been doing? It's been going down. And you pull up this stock, which is, by the way, in the Dow Jones, so it should be something you're probably looking at on a daily basis in terms of what stocks in the Dow components are actually trending. This is not a stock near a low. This is one of the stocks that's near the blasted high. Okay? Again, we wouldn't need super advanced tools to kind of put those two and two together here. Not at lows. We're at highs. Index is at lows. Okay? The stock is near highs. Relative strength. Say it out loud. Okay? Now, want to go back and look at something. If we were to get this to go to the upside, if we come down and draw this from the high down to the maybe where this move was, okay, and what you're now going to notice is if we look at this and say, what might be a potential target if we used a 161 Fibonacci Ben Watson extension, it would be the 172 price tag, okay? I ain't gonna lie, okay? I like a good spreadsheet. I'm not gonna lie. I like organization. I just do. Okay. Now, so that's if you kind of say, hey James, you didn't put a target on that, but what might be a target? Okay. So we talked about the RTX yesterday. Bounce. I just kind of keep an eye on triple M. We did an example on triple M of something buying half the position and then adding half. Now let's have a kind of everyone gather in here for just a second. Why might it make sense to split the positions up? How many of you have ever been afraid? My hands up. Two of my hands are up. How many of you have ever been afraid when the VIX went up and you were just frozen in fear? Deer in headlights as I'm staring at the light right now. I can't see anything. How many of you were just scared? And people kept saying these words of market crashing, bear flag, bad sentiment. And all of a sudden, with what they said, you didn't know how to kind of think through it yourself. And all of a sudden, by the time you realize that things reverse back to the upside, you kind of realize that you missed some of the opportunity. Okay? Well, the reason why we split these entries up is we try to not risk all the capital at once. We try to have it prove that it's trending back to the upside. And the thought here is if it's trending more, the paper money account will show more capital. So if it does more in terms of trend, the paper money account will show more capital. Okay? Now, the nice thing about buy stop is you can have thoughts, ideas, but the problem is you got to be there to execute them. With these type of order, if it goes up to that price, whether you're at the grocery store, the post office, or you're playing golf, or you're on an airplane, it's going to fire those orders, okay? So this is committing. This is not an alert. This is an order to get in, okay? Ben Watson, what say you about this, okay? All right, Gotta mess around with Ben Watson a little bit. That's the nice thing about messing around with Ben Watson is he doesn't know where I live. And if he does come to my house, there'll be a bodyguard anyway, so I can protect myself. All right, now, what I want to kind of also do is let's kind of show some stocks that kind of might be in that diagonal, okay? Now, I want to kind of show you something. How many of you ever feel like you need a kind of a good laugh in the day? You kind of feel like, man, I need a good chuckle, okay? So today, Ben and I, we post on X, and we post throughout the week, we post on the weekend, etc. And some of the things that kind of we kind of said today were kind of funny. So feel free to kind of go through some of these things. And one of the things we talked about here today was read my lips, diagonal resistance. Okay. Now remember, on Monday on the class on trading with technical indicators, we talked that many technicians don't just like that in terms of price action, but they might like it in terms of volatility. Okay. Now, here we are in the fundamental class. When things pull back, the price multiples are compressed. Why do we say that? Well, when you get the price to come down, the price multiples like price to earnings, price sales, price to book, cash flow, etc., they look more attractive. The other thing that we talked about last week was when the price comes down, there's a greater statistical chance that you could actually get earnings yields actually more attractive, but also intrinsic values higher than current stock prices, which means they're trading at a positive margin of safety. Okay? So when things pull back, it's not less interesting, it's more interesting. Boy, I sure hope you realize that. Okay? Now, does that mean that there's no risk? Of course not. There's risk on any entry. Okay? Now, want to kind of go back to something and just kind of show us a couple stocks that might kind of stand out with this idea of read my lips. Okay? Diagonal resistance. Now, if you look at this, one of the stocks is kind of getting, I don't know why I'm thinking Josh JP here, but if you look at this, you're kind of seeing that this MSTR kind of getting into a little squeeze here. What do we mean by a squeeze? Well, if we kind of said higher lows on the bottom, lower highs on the top, and a little pokey, as Bill would say, pokey through the resistance area, MSTR is trying to get a little push. Now, when we say MSTR, the other stock that we might kind of keep an eye on that might have gone a little bit more than that, maybe, is Palantir. The paper money account has a position on Palantir. We could probably draw some angles of resistance, and you're going to kind of look at, we're kind of gotten above both, the white lines being diagonal lines. Palantir trying to mount up to see if it can start to get a reversal. Probably the number there to watch is 88 and change, but that's also one that is price and price movement, okay? Or some people like to call it volatility or beta. Now, the other one we're going to kind of keep an eye on is if you said, James, I like the idea of buying low, selling high potentially. Well, PanW has gone up, down, up, down, up, down, up, down, okay? And it's gotten a little bit of move up here as well. So if you kind of like the idea of trading a range, PanW is there. If you kind of said, James, I'm more like a diagonal support person. I like to kind of see upward, I like to see higher lows where I can connect those higher lows and we pull back to the higher lows where we're starting to kind of get the moving averages to pinch or cross over on themselves. Cisco is another one that's actually sitting right there as well. Okay. Now, the other one I kind of want to make sure is when we talk about a diagonal resistance breakout, we also said that could be like a shorter term intermediate flag for our Canadian friends. And yes, we do love you. I've been to Canada many times, lived up in upstate New York, love Canada. Okay. Great people up there. They say fleags. Okay. Fleags, flags, same thing. Okay. When you look at this, the other stock we talked about yesterday is could maybe GE get really above diagonal resistance. And what do you know? GE, okay, getting a little push. Now notice when we had that large green candle, a little down day. And that little down day barely gave back half and then poked its way to the upside. That's one that's kind of getting out of that flag breakout, maybe right here now, could it potentially go higher? Now, so today, kind of our theme was kind of talking about this continuance of what we talked about Monday, diagonal resistance. Today, we also practice dollar cost averaging when the price or if the price goes higher. I want you to continue to practice that. I also want you to kind of practice drawing these diagonal lines on some stocks that might be getting above resistance and look for a breakout and or a higher low bounce setup. Or just even practice what we talked about on Monday and Tuesday, which is practice is setting up a breakout trade with a buy stop limit order. These are just variations where you're trying to time the entries, okay? And the last one I'm going to say quickly, I'm not going to talk about deep. Keep an eye on Love. They changed no free bags anymore, okay? You're going to have to pay with what you bring here. And you're going to see that that's padded some of the income statement, or that's the idea, and it might try to help the equity. That's the idea. We'll see how that plays out over time. Now, I'm out of my time here today. If you have not subscribed to the Trader Talks channel, Schwab Coaching, make sure that you do that. We're right on YouTube. Also want to give us a quick reminder that make sure you realize that this has been recorded. And also remember the workshops as well. Go to schwab.com/events. And also remember with what we talked about is done for example and illustrative purposes only. And this has been the class on trading growth and value stocks. So just go to YouTube, type in Schwab Coaching, and you can find us there as well. Thank you so much. Take care. See you back tomorrow morning. Bye-bye.